Hey everyone, I am happy to announce that this is the very first video I'm doing from my brand new home here in Coronado, Panama. We just got here a few days ago. It's still hard to believe, but we're finally here. I am filming from our balcony, so unfortunately it is raining today, so it's a bit cloudy, but that won't be the topic of this video because we have much more important things to talk about because the stock market is going down, right? So you can always check out my two recent Panama videos. Those types of videos are, personal stuff is really located in my financial freedom journey playlist, so you could always check them out if you're not aware or you want to learn more about my move to Panama. So the fear train has started, right guys? All aboard. All you see now on investing YouTube channels and the media or the news is really negative and scary about the stock market and the economy. Recession, stock market crash, negative investor sentiment, that's my favorite one. Inflation, end of the world, and of course this time it's going to be worse and worse, much worse than the last crash or whatever, right? Blah 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 blah, all the usual stuff. So I said, you know what, let me do another YouTube survey and see what the community really wants me to talk about. I'm here to make videos for you guys. So the clear winner, which kind of surprised me a little bit, was how does income investing compare to growth investing during the bad times like we're having now? I thought for sure the winner would be top 5 things to remember and top 5 things to do as an income investor during the bad times. But that one came in at second place at 26%. But don't worry, I'll do that video as well, so don't worry. So first off, let me thank you for everyone who participated in the survey. Don't forget, if you want to participate in the next surveys where I ask you guys what videos you want me to cover next or what topic you want me to cover next, all you need to do is be subscribed to the channel. And then when you click on my channel name, if you click on community, you could see them there, or make sure to turn on notifications. So in this video, first off, I'll quickly review what income investing is and what growth investing is in my opinion. And then I'll go through 5 points on why I believe income investing wins during bad market conditions. Let's get to it. So I apologize in advance if the screen wobbles or there's a little bit of wind noise. This is my first video doing it on the balcony, so if you guys don't like it or it's too distracting, let me know in the comments and I'll just go in the office and do them there next time. So income investing, let's compare income investing to growth investing. The way I see it, income investing is somebody investing with the primary goal of generating passive income or cash flow on a consistent basis. So whether you need the income, whether you need some of the income, or you don't need the income, that's irrelevant. It's up to each individual person and situation. The drip, of course, is great for somebody who does not need the income right now. The income investor's top priority is not long-term capital appreciation or maximum total return over a long period of time, but it's really to generate maximum cash flow to enhance their lives right now. So I put myself in this category, of course. So I invest in funds that typically hold dividend stocks and use income enhancing strategies like covered calls, like leverage, to attain maximum cash flow, right? You're squeezing out as much income as you can in the safest way possible according to one's tolerance level. We all have different opinions on the level of risk certain funds have, but that's the fun part of being a do-it-yourself, a DIY investor. It's building your perfect portfolio, because the perfect portfolio does not exist in my opinion. It's what's perfect and what works best for you. So the growth investor, on the other hand, is only interested in growing their capital and getting maximum total return over a long period of time. So they're not in it for the cash flow right now. So whatever dividends they do get, if any, usually it's very small, they tend to drip it anyway to really build that growth again over time. So the growth investor typically invests in very, very low fee index-based ETFs like S&P 500, NASDAQ 100, the TSX 60 index in Canada, etc., etc. They typically have an emerging market index ETF or a European index ETF as well, maybe 5 or 6 total, and that's it, right? You're basically trying to get exposure to the stock market, markets and best stocks all around the world in the cheapest way possible. I'm talking about fees here. So this way you can really maximize your long-term returns with the intention of really selling your capital one day, right? Hopefully at a much bigger price than you bought it for, or what your average cost is over time. So buying low to sell high, basically. Even if it's much later, it's still the case. It's still buying low to sell high later. Now, I already made a detailed video that compares the pros and cons of the income strategy, the growth strategy, and even the strategy which I feel is right in the middle, the dividend growth strategy. So I won't talk more about this now, so make sure to check out that video if you haven't seen it. It's a pretty good video where I go through the pros and cons for each strategy. And of course, don't forget, mixing the strategies is also a good option. So let's start with why income investing wins. 5 reasons, right? Reason number 1, income consistency. So the clear advantage the income strategy has over the growth strategy during bad times is really the consistent cash flow that you get on a monthly basis, right? Now, of course, there could be some exceptions like split funds that stop paying temporarily because of that's just the way they're structured. That's because of that $15 unit NAV rule, but that's really specific to split funds. Only it's the way that they are structured. So I'll talk a little bit about those in the next video I do, because I've been getting a lot of messages, a lot of concerns about certain split funds like FFN or DGS that are under $15 unit NAV that are stopping the dividend. And I see a lot of chatter about them in the Facebook group. So don't worry about it, guys. I'll have you covered. Stay tuned. I'll talk about that in the next video. So the fact that you're getting paid no matter what typically certainly helps during a market crash or a recession, right? Because although your capital is going down in value, you're still getting paid every month. Hence, income investors have a much better time sleeping at night during the bad times compared to growth investors, because growth investors typically get very, very little or no cash flow whatsoever, and it's usually dripped anyway. So you have no plan B as a growth investor, right? You pretty much are fully dependent on the stock market. You're fully dependent on stock prices, which means you are consistently watching stock prices and the stock market every day. Why income wins? Reason number 2, the covered call strategy. So this ties into really point number 1, right? One of the main reasons that the income remains consistent regardless of stock prices is covered call writing. So this is what I like to refer as an infinite source of income, no matter what the stock market does. Not only that, but the premiums generated from writing covered calls are higher when volatility is higher, like we're experiencing now. So I've been getting many questions lately also about, will certain funds, covered call funds, be missing dividends if they go too low? Remember that covered call funds have 2 sources of income, dividends and covered call premiums, right? So it's very rare, first of all, that blue chip companies reduce or cut their dividends. It is possible, but it's very rare for the blue chips. But the covered calls adds a layer of protection for your income, because covered call income never goes away no matter what the market is doing, right? Now, of course, the income from covered call funds can vary from fund to fund. Some funds, the income only or mostly comes from covered calls, right? Especially things like technology ETFs or technology covered call ETFs. So they can have fluctuating monthly income. Another example besides the technology is the Bitcoin and Ether covered call ETF, for example, which have been completely annihilated recently because of the recent sell-off in more risky assets like technology, and of course the crypto falls into that category as well, right? They're not dividend stocks, right? So the income from those ETFs is purely covered call income. So the monthly payouts can vary. Same thing with, like I said, technology. So funds like QYLD, right? So this ETF has the NASDAQ 100 index, which barely has any dividend. So that's another example. So it's important to remember that the covered call strategy, everyone, is a defensive strategy. It's a defensive way of owning stocks where you will definitely sacrifice some long-term total return for more income stability during the bad times. This is why when you look at any description of a covered call ETF or fund, you usually see something like covered call writing or covered call funds reduces volatility. The way I look at that statement is that it reduces the volatility of your returns, right? It makes your returns more consistent. Of course, you are paying for this added defense and get less total return over time. Much of that total return lost actually comes from the higher management fees that these products have, because it's completely normal, because it takes more work for a fund manager to write those covered calls every month compared to just an index fund where the manager basically does nothing. So that's why they have much lower fees. So that is a big part of where the additional fees come from on these covered call ETFs. So a lot more defense, a lot more stability with the income. And this leads me to point number 3, why income wins. Point number 3, you are less dependent on stock prices, on what the stock market is doing, this is probably my favorite one, and really has to do with the mental health aspect, right? So I've personally been through the 2020 crash, so it's not my first rodeo. I know many of you watching have a lot of experience, some of you a lot more than me, and have been through this type of market crash or market cycle before, right? You could clearly see in our Facebook group, if you joined it, who is staying calm and giving positive words of encouragement, and who is a bit newer and has never gone through a really bad time like this, a really violent market correction or volatility. So income investors typically only touch or spend their income. They never touch their capital. We don't need to sell our capital. In fact, you should have it in your head as an income investor, in my opinion, of course, to never sell anything and just live off your income. This means that you are not as dependent on stock prices or what the stock market is doing, right? You are only dependent on time itself. The longer you stay invested and collect those monthly income, the better off you will be long term. The perfect analogy, or good analogy, I think, that I always use is owning an apartment building, right? Doesn't matter what the real estate market is if you intend to just keep your apartment building and never sell it forever. No, not really, right? All that matters is that your rents keep coming in so you could pay your expenses and your monthly your mortgage payment until it's paid off, right? So the same kind of concept applies to us income investors. However, there are no monthly expenses, and the mortgage is really our initial investment, or how much money we put in. So the longer we wait, the more of it we pay off. Think about it this way. If you are making about 10% yield a year on your portfolio, what happens after 10 years? Well, that's 100%. You literally make up 100% of your money back. In comparison, if we stick to the real estate analogy, everyone, the growth investor, on the other hand, they're buying houses, non-cash flow houses, and waiting for them to appreciate with time and then sell them later on, right? So there's no cash flow there. So they are completely dependent on the real estate market. So not being dependent on the stock market and on stock prices is really a privilege that income investors have over growth investors. And this is what allows us to stay calm and sleep well during the storm. The growth investor, of course, can also stay strong and not panic sell, but it's much harder to do so when you're not getting paid every month, right? Because he does not own any income generating properties or income generating assets, which means that he's at the complete mercy of the stock market. There is no plan B. Why income wins number 4? We care a lot less about stock prices, right? I mentioned it a little earlier, just mentioned it. So I cannot begin to tell you how much of a benefit this is, once again, for mental health. Since income investors are much less dependent on stock prices for the reasons I discussed earlier, we care much less about stock prices, right? Think about it. If your intention is simply to hold stocks or hold these funds long term, if not forever, to simply collect the income, why would you really care that much about the day-to-day, month-to-month, year-to-year value of your capital, of your portfolio? I don't. I think I make this pretty clear every time I show you guys a portfolio unveil video, right? In 2020, I was down 35% overall. I'm talking about my capital here. Then after the recovery in 2020, 2021, I was up 30% or something like that overall. Now I'm back down again. Guys, I'm telling you, I can't be more honest here. I really don't care. I can't be more clear and honest about this. Does it look like I care? I mean, honestly, I only care about the passive income, the cash flow that my portfolio generates, because that is my real bread and butter. That's what I'm living off of. As long as that remains constant, I know that over time I will always win the longer I wait. And eventually my investments or my capital, my initial investment rather, will be paid off by the income I've been getting my whole life. So that's the way I see it. Also, even on the accounts that we don't draw any income from, for example, the RRSP, the income is still getting paid, and it's being reinvested every month manually or via the drip, right? So think about it, guys and gals. I got to start including the gals. I always say guys all the time. If you are dripping and you are a long-term, if not forever, investor, the best thing that could actually happen to your portfolio is a market crash, is a big correction, because you are automatically dollar cost averaging. You will automatically be buying cheaper shares once your drips go through, or whether you're buying them manually. So this not only increases your income, your passive income month to month, but also increases your yield overall, because we know what happens when you buy cheaper, the yield is higher, right? So the growth investor, on the other hand, has very little income to drip, if any. So you need to invest more money to take advantage of the down markets. I'm not saying you can't do it. You can, of course, do that. But if you don't have any spare cash or any spare money, there's nothing much you could do but really wait for the market to recover. And waiting is much harder when you're not getting paid every month. Point number 5, why income wins. You're living off your interest, right? So income investors don't need to sell anything because they are typically, like myself, just living off their income. So just like an owner of an apartment building, there is zero reason to sell it, as you could simply live off the rental income, right? Same thing for income investors. This is crucial because, again, this makes us not care about stock prices or what the stock market is doing. So this is a huge factor for somebody who is retired and living off their passive income. They're on a fixed budget, right? Only spending the interest, never touching the capital. I think I can't think of really a more conservative strategy to preserve your wealth and your capital long term, right? The growth investor, on the other hand, typically needs to draw down their capital over time because they can't just live off that 1 or 2%, right? The cash flow is too little to live off of. So they're drawing down their money. And of course, you always have the option to switch and become an income investor later on, of course. I get this question all the time, right? Is it better to just do growth until I actually need the passive income or the cash flow and then just switch later on? The answer is sure, you could do that, but you could also simply stick with the income strategy from the beginning and just drip if you don't need the income right now. And in my opinion, that's what I do. For example, even in our retirement accounts, where we're not going to be using it or need the income for decades, I still choose to go with the income for the mental health advantages and just for that warm and fuzzy feeling I get seeing that reinvestment, that drip go through, right? And most of you already know, I do offer a one-on-one coaching session. So I've met with over 300 people now from all around the world, mostly Canadians and Americans, and many of them are retirees or people who are about to retire and they don't manage their own investments right now. They're typically invested in mutual funds with their financial advisor or an institution, right? The number one problem and complaint I get from all of these people usually is the uncertainty of how much money they really need to save up or to put aside to be able to live comfortably forever, right? The number one issue with mutual funds is that they don't generate cash flow. Any dividends, interest, or cash flow that they do generate is typically just reinvested in the fund, which means that you are obliged to sell your units off or draw down your capital over time. So there is a lot of fear and uncertainty with that, especially when the market tanks and you see your capital drop significantly because you're drawing down your capital all the time, including during the bad time. So drawing down really means selling shares, selling units, and there is no worse time than selling anything when the market tanks. Income investors, everyone, do not have this problem because they simply live off their interest. This advantage is probably the number one reason people have given me on why they want to switch to passive income investing. So there you have it, everyone. In summary, pretty much all the benefits an income investor has over a growth investor during bad times are really psychological, not technical, right? I've said it before, and I'll say it again. There is pretty much 100% certainty that a growth investor will beat the income investor over time in terms of total return. But will it really make you happy? This is the way I look at it. Will it really make you happy to be 7 years old and have an extra 50,000, 100,000 or more in the bank, when you're at that age? Will it really make a difference in your life, in your lifestyle? Or would you rather live your best life now in your prime years, make your returns consistently month over month all the time, and get all the mental health benefits that comes with income investing? My personal opinion, everyone, investing isn't just about maximizing total return, although many people do think that way, and that's fine. Everyone has their own view on investing. For me, it's also about using your money as a tool to enhance your quality of life. This includes mental health, right? Something that is almost never talked about when you watch investing news or YouTube investing videos, etc. It's about lifestyle, not just dollars, right? Money is not something to be hoarded, in my opinion. It's a tool you should use to make your life better. So now that you have my thoughts on income investing versus growth investing during the bad times, what are some important things to remember and do as an income investor during the bad times? So stay tuned, because that will be my topic, or the topic in an upcoming video. Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys where I ask the audience, I ask you what topic you want me to cover next. So very important, subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website. We have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the ultimate DIY investing package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors. So it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with lifetime updates. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1-hour Zoom call with yours truly, a one-on-one with me where you could ask me anything you want. We'll go through your situation and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there. Passive Income Investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other, and it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right, in order to build their own stream of passive income to enhance their quality of life and one day become financially free, financially independent. Very important goal. So, as usual, continue to stay safe, everyone. Stay healthy, and of course, stay passive. See you next time.